What's going on, traders? I'm Devis from Trading with the Bulls, and on today's trade breakdown, we're going to be going over our EURNZD trade that we took for 145 pips. Again, this is a lot of pips that we're covering in a short amount of time. This is why I like swing trading. So we're going to be going over our entries, we're going to be going over our stop loss, our take profit. But before we do that, go ahead and drop a thumbs up, subscribe, and comment what Forex related topics you want to see me cover next. What's going on, traders? So today we're going to be going over this EURNZD trade that we have on the screen. And as you can see, we did take a buy on this trade and we did write it down or up to 144 pips, really close to 145 pips. And basically the same thing we mentioned in the couple weeks before. We do like to swing trade here on Trading with the Bulls. The main benefits is really we're not going to be on the screen as much because these time frames that we're looking at, the daily, the 4 hour, the 2 hour, they take a while to complete, as opposed to when you're looking at the lower time frames. You know, these moves are going to be completing in a few minutes or maybe a few hours. For us, it's mostly going to take a couple days to complete, but we're going for bigger moves overall. You know, we're going for over 100 pips. Last week we saw trades that we took over 200 pips in profit, and here we do see a trade of over 140 pips. So let's go ahead and analyze this EURNZD trade and see what the confirmations were for my entry, my take profit, my stop loss. So let's break it down. All right, so as you can see, we did hit this quarter level that I spoke on my previous videos. It's supposed to be every 250 pips, and then I have it split to every 125 pips. I'll go over that in more details in a future video. But we did hit this area last week, and as you can see, these previous days before, we have been hitting these levels. Even if we draw an arrow down here, you know, we have been hitting these levels before and seeing clear rejection to the downside, and then we do see a lot of bullish momentum every time we get to these levels. So clearly it's a zone that we want to take a look at. Clearly it's something that we want to be watching out whenever we do hit these zones. If we see a lot of rejection to the downside, maybe we can see if we get some buying opportunities like we did on this trade here. So the first thing we want to take a look at again is the top down analysis that I like to do, which is basically we start from the daily, work our way down to the 4 hour, the 2 hour, the 1 hour, and that's really about as low as I like to go in the charts when analyzing. So let's go ahead and take a look at the daily. And we do see that when we're looking at the daily, we want to focus on first the market structure, like I said on the previous video. And as you can see, we have these level of higher lows here. They weren't really broken, it was more of a test, and as you can see, we shot back up. So these levels here have never really been broken. We did see it was tested before but shot up, and again we have these levels of higher lows that haven't been broken. So we're still considered to be in a buyer's market. So I'm going to be looking mostly for buys. I mean, I can take sells when we do reach these tops, but you really want to avoid counter trending. You're taking trades that are against the current trend. So right now I was looking for buys. We did hit this resistance. So this is where we start taking confluence trades, which is a confluence just means that we're having all these confirmations just add up. So the more confirmations that you have when taking a trade, you know, the higher probability that it is that the trade is going to go your way and it's going to go the direction that you think it is. So we have this level of support here that has been touched, where we do know that we are in a uptrend, and we know that every time we hit these levels here, we have a lot of bullish momentum. So let's zoom into the 4 hour. And we see that the first time we hit these levels, you saw clear rejection. You saw a lot of bearish momentum, and as soon as we hit the levels that we drew out with our arrow, so let's go ahead and highlight this real quick. We saw instant rejection. We did see a bullish pin bar instantly with a lot of rejection to the downside. And then we did see a little bit of resistance when it came to that quarter theory level. So as you can see, it's always respecting whether support or resistance. But then we came back down for a double bottom, and then we saw again some more rejection. Sorry guys, I keep hovering. Let me delete this for now. So we see a little bit more rejection here. Let's go ahead and copy one of these bubbles and bring it down. So we see a double bottom. Again, if we zoom into the 2 hour, and as you can see, that double bottom, some more rejection to the downside, and then we saw a lot of bullish momentum. And one thing that I want to point out here that's very important is not only did we take this trade in confluence with our technicals, but if we go to forexfactory.com, which is where I like to see what important news events we have going on that day and that week. So this is like a little bonus tips that a lot of people don't tell you. You don't only want to focus on the technicals, but mix it up with your fundamentals as well. And you see that on that Thursday of October 24th, we did have a lot of news for the euro pair, and a lot of bullish news in my opinion. From what I have analyzed, I'm not really going to go too far into the fundamental side, but it is something that you want to mix up with your trading. You want to have a good balance of technicals and fundamentals. And as you can see, with all the confirmations, we went ahead. Actually, let's go ahead and reverse back here. And we did take that entry at the 1.7340, and we took that trade with very, very minimum drawdown, and we took that all the way up to 145 pips. I did see a lot of resistance here at the quarter theory level of 1.7500, so I put my my take profit just below that, and as you can see, I mean, it worked perfectly because we didn't reach that level. We just went a couple pips under it, so we wouldn't have been, our take profit would not have been met if we went all the way and got greedy and tried to take that trade up to the 150 pips that it could have gone. So you always want to make sure that you give yourself a little room to breathe when it comes to your stop loss, and don't get so greedy on your trades when it comes to your take profit. But if we go back, you can see that the golden rule that I mentioned last time, which was my 1-to-2 risk to reward ratio, was met again. So this one just barely meeting it at 2.05, but of course I'm risking 70 pips, almost 71, to reach 145 pips. Again, thanks for tuning in, traders. Don't forget to comment what topic you want me to cover next. Hit subscribe, and I'll catch you on the next trade.